Okay, hello everyone. Very good evening to all of you. So today's session is again in continuation with the previous weekend session that we had with regards to portfolio allocation. So we have with us Mr. Vishal Varyalani from Strategy One. So he will guide you in further to the discussion that we had last week, on which we have also uploaded the video on our YouTube channel. So we will be recording this session as well. And if you have any queries, you can ask us in the chat box, and Vishal sir will be happy to answer those questions at the end of the session. Thank you. Yeah, Vishal sir, you can continue.
Thanks a lot, Nelson. So thank you guys for attending these sessions once these kind of sessions again. Uh, this is another continuation on, how do we become better as algo traders. So we're going to talk about trading psychology this time around. Earlier, we had a talk about, how to make your portfolio and correlation of a portfolio, how to be, working towards making a sustainable return. So if we talk about the construct of this webinar, we're going to start from, the psychological construct of an algo trader. Why are we algo traders? How we become algo traders, and what is our psychology behind it? Then we will go and see what are the pitfalls that we encounter with algo trading. What are our, how the psychology affects us in numbers. Nelson, if you could just help me with admitting people while I'm doing the presentation.
Yes, sure, sir. I'll do that.
Yeah. So we'll go through this, the psychological construct, the pitfalls, the psychology, how it affects in numbers. We'll look into some examples. We'll look into, how a lot of people look into, trading as sports, and how does that impact, in terms of our emotions, and how can we apply sports psychology to trading? And then eventually we'll build a plan to build our psychology as well. I just need to mute myself here, and then we will eventually talk about strategy one. Okay, so let's go with this. All of us are algo traders. Someone is full-time, someone is part-time. And the idea is that we are self-employed when we are doing algo trading. Eventually, when we say that we are self-employed, we still have a job to do, right? And when we talk about jobs, if we just draw a parallel between an algo trader and someone who's doing a job, there are certain things that are common. One is peer pressure. So all the time we have a peer pressure when we, look into trading, we look into examples of successful traders, and that's why we're trading, because we have seen other people being successful. And when you look into that, you look into social media, there would be tons and tons of people who will post, put their success stories, and that inspires us. But at the same time, that also puts pressure on us that, okay, we can also perform. And if we are doing trading every day, then it also makes us, put under pressure in terms of, we should be having similar results as well. In one sense, we have daily wages. As a profession or an activity, we see our net worth fluctuating every day or every second in front of our eyes. So it's kind of daily wages. So it's not a job where we get a income at the end of the month. This is like every day we are getting that income, and that's a very it can be a very difficult thing, because most of us are white collar employees, or we were white collar employees, and now we are looking at ourselves as daily wages in one sense. So that's a very important thing to understand, and that affects our psychology. We talk about performance metrics that are there in jobs. Now, most of the times, there would be performance targets that we would have, but in trading, there are no performance targets. Everyone has a different target. Someone would say, I can do 4% per month. Someone would say, I would want to do 10% per month. Someone would say, I want to do 15% per month. So everyone has a different type of performance matrix, and this is not something that someone is giving you. You have to design it yourself. And there is another very important, relationship that we talk about, which is a boss-subordinate relationship. Now, when we talk about any organization that we are working in, generally what is happening is we have a boss assigned to it, and we are a subordinate to that boss, and he gives us instructions, he gives us guides, he guides us, and he gives us feedback. Here in trading, the boss is the market. It is giving us feedback every day. It's up to us if we are listening to that feedback or not. And what is that feedback is something also that we need to understand. It is only something that will help us improve as traders. And that's where again psychology building comes in. Any job has got a growth prospect as well. In trading, there's actually no hierarchy. Unlike other organizations, if you're a general manager, then you will become a VP. Here, it's not like that. It's like even a general manager can go down to become a senior manager. Someone can go down in the hierarchy because of a drawdown, because of some issues with psychology, because of so many other issues that he might have. So that's something that we need to understand about trading. Trading is not that kind of a business that if you have a big capital, then you will stay with big capital. You can lose big as well. You need to have the right kind of psychology. You need to have right kind of risk management. And these are the things that we work towards. Last but not the least, which is something which is very strange. Normally we look for job security. In here, there is always a job security. You can always enter the market. Market will never let you go. It'll always give you that chance that, okay, you can stay now. You will be successful. You will be successful, but it will never let you go unless you say that, okay, I quit. So from the market is never going to fire you or anyone else. That's a peculiar characteristics of this job that we are doing every day. When we talk about these kind of things, it's very important to look into it psychologically. How does this kind of thing affects us? When we come to algo trading, most of the people will switch to algo trading because of years of discretionary trading. They believe that they don't need to develop their psychology, strongly with algo trading, and algo trading will take care of everything. And that's not true, because there are certain pitfalls in algo trading that sometimes we feel that this is what will actually help us, but in a sense we expect too much out of those things. One is a backtest expectations. It's a great tool. Tradetron provides us with a great tool of backtesting, but it also gives us rise to a lot of expectations which are not tested in live market. Live market has so many other parameters and so many things that you will not have in a backtest. Backtest is a guide. Backtest is a validation of the idea. It is not a surety of the idea. That is what we need to understand. Things like slippages, fluctuations, they can affect the parameters way beyond what we think. And the fluctuation of P&L, how it affects our psychology. You might have a backtest which is giving you a fantastic result over 6 months, but what that strategy does in 2 days is something that you will only understand in live market. Backtest will never be able to tell you that. Even paper trading will not be able to tell you that, because paper trading is still not money that is going or coming to your pocket. When we talk about, another pitfall, which is, we try and predict our future or future performance based on the current performance. This is another thing that people end up doing a lot of times. We try to look at things that are performing right now, and if our strategies are not performing, we switch on to them immediately. But current performance is never a guarantee of future performance. Future performance will, of course, be different. There could be different trends. It could be similar. It could be different, but that's not a guarantee. And people tend to believe that, okay, if certain situation certain strategy has worked in the situation, it will work afterwards as well. That doesn't happen generally, because every situation is handled very differently from different strategies that would come about. Then the last is curve fitting. Another thing which we end up doing a lot in algo trading is because we have so much data, and we try and make sure that, I think everyone wants to avoid drawdown. That's the basic assumption that I'm taking here. And my understanding of customers is that everyone wants to avoid drawdown. They want to just enter, when the equity curve is going to go up, exit before the drawdown is going to start. That never happens, though we would want to always do that. And that applies to a lot of people who are doing their own strategies, or you're trying to optimize the strategies. Eventually, it's basically curve fitting. You're trying to fix short-term problems that you have seen without looking at a long-term solution to it. A long-term solution to a day like today. In fact, today is probably today and yesterday are perhaps some of the very good days to talk about this kind of a topic. I think a lot of people did face, issues with straddles and strangles and with a lot of, expiry being very wild. And, I mean, I can't tell you how difficult it was for a lot of people, and including me as well. So this is, probably a good day to talk about it, because we are trying to, we'll say, okay, now I will not trade expiries, and I'll stop trading at expiries at, 1 o'clock. But that doesn't happen. If you look into the backtest, if you do that to solve today's problem, that doesn't solve the problem for last 2 years. In last 2 years, it actually might be that, yes, there was one day when we had an issue, but other days we actually gained from it. We actually gained from staying in the market at 1 o'clock. The market did not fall like this. Or when the VIX was higher, the market did fell, but we did capture some of the gains as well. Or a day like today, where the premiums did not move anywhere while the market was moving haywire, we would have still gained if it was some other day. So we try and cope it all the time. So this is what has happened today. So now I fix this and then I will not have this drawdown. It never happens. Once you do that, there's another drawdown that is going to come. Because future is not what we can predict. No one can predict. Backtest is not for future prediction. So yeah, so we talked about pitfalls. And now, we'll look into some of the things that affects us, the psychology numbers. I'm going to refer to a couple of examples here. So we have a case of a person A and a person B. This is real data of those people, and we know those people. We have taken the consent, of course, without sharing their names. Person A had a portfolio that they had been running for some time, and you can see the portfolio's performance here. So it basically went from 0 to 3 lakh rupees of gain. Now, this portfolio was very attractive to person B. And although he started with another portfolio, once he was in drawdown, he said, for a single day of drawdown, he said, I want to move to this portfolio. It looks very interesting. So this is the point of time when both of them had a similar portfolio. Now, they entered at the same time. And while this person was staying into the portfolio, they got a vertical rise in the portfolio, from 1 lakh to 3 lakh rupees of profit. Then there was a steep fall that you can see here. And then by, in 2 months, almost 2 months, the portfolio was back to where it was. But with our friend, person B, he could not sustain it. He felt that it was too volatile for him. He said, no, I'm going to quit and I'm going to go back to the other portfolio that I had. I don't want this highly volatile portfolio. While he did it, he expected that the other portfolio will be smoother in curve, and I'll show you that portfolio, in the next slide. His drawdown is still around 5.2%. While the person who stayed with that portfolio, the drawdown has reduced to 3.64. And there is a quick recovery that has come in over there. We look into another example, person C. Now, this is where, a person C had a very different kind of a portfolio, mostly intraday. He was very conservative. And then, the growth that you can see here is a conservative growth as such. It doesn't have a lot of peaks and valleys, and it's a very different kind of portfolio to person A. Person D, who had a similar understanding and he wanted to replicate this portfolio, stayed, joined at this time when, person C was at kind of a equity high. He joined over there, and then in couple of weeks, we had a drawdown and a stagnation in the portfolio. So as you can see, the portfolio is stagnated here for a considerable amount of time, about a month. D person still stayed on because it was his first month. Many people have a lot of expectation that I would want to stay on or not. He stayed on, and then he started reaping the benefits. And that you can see, there is benefits for both. So they've stayed on. This person C also stayed on. It was probably easier for him because he had previous gains. And the same case goes for person A. They had previous gains, so it was easier for them to stay. But it was also related to psychology. The psychology in both the cases was different. This guy did not have a previous gain. The psychology was different. And the psychology was married to the expectation that this person had from trading or algo trading as such. So these are the things that define us, on what we want to do in algo trading. Trading and sports have a very simple correlation in one sense. There are instant results that we have. It is a high adrenaline activity, and it is very high on emotion. When we talk about trading, and sports, for every outcome there is a winner and loser. So there is not like it's not like that, unlike other things, activities that you do, that there could be someone in between. Except exchange, no one is everyone is a winner or a loser here. So that's trading and sports. Sports also, there are not many ties and draws these days. When we talk about sports and why sports and trading are similar, a lot of people, let's say hedge funds, consider trading and sports as very similar, and they will arrange psychology sessions, for your uh, uh, traders with the sports psychologists. Some of the top sports psychologists will be given the chance to, or will be asked to train these guys. So when you have something like this, it is essential. Why is this happening? Why are traders being trained like sports, or to start thinking of trading like sports? So there is a quite a reasonable comparison on how trading activity is planned, how trading psychology is working for most of the people. And this is where we will talk about how a successful sportsman trains himself. The training is every day. I mean, when Kohli was out of form, he was not training for I mean, he was not training just because he was off leave and he was at home. He was still going to the gym. He was still conditioning his mind. He was still thinking about cricket, thinking about his game. And these are the things that define champion sportsmen. They work on their weaknesses. They reflect all the time. They balance their approach. They will always assess, keep on assessing what is right or not. And then they will also condition themselves mentally for high pressure situation. So they plan these things in mind. I mean, once upon a time, if I read, some of the interviews of Tendulkar or Sehwag and these guys, they will think in their mind how they're going to face someone like a Shoaib Akhtar. And that's how they plan. And that's how you plan your psychology as well. So when we talk about sports, and sports psychology, there are some emotions as well. When we talk about trading, there are emotions as well. So let's look into our trading emotions that we have. First, we'll start with negative emotions. One of the biggest negative emotions that everyone has is fear. We'll have drawdown, we'll have overnight risk, we'll lose our trading edge. The other is guilt. Oh, I left a strategy in DD, or I started at a equity high. I have an opportunity cost. This strategy did not give me results for a considerable period of time. Now I have an opportunity cost, and I lost that. And that's kind of a guilt that comes in. Shame. When we have losses, we don't share them with people. We start blaming external things. We start blaming, market was not kind for us. Market, there was so much volatility. Everyone lost. We start hiding from ourselves that, something did really go wrong, right? And instead of accepting, we started hiding things. And then last is, envy. I mean, something which you all have seen these days. There have been quite a bit of FinTwit wars. And most importantly, one of the envy things is that when you start copying style of someone else, just because that person has got results. Now that person might not have the same psychology as you, but he's got results. It has worked for him. It is his psychology. It is his understanding of trading that he is taking, and then basis that he's running certain strategies. And eventually what this all is what we talked about, reflection. So we have to reflect all our negative emotions. What are these negative emotions? Where are they arising from? Are they arising from the fear of drawdown? Are they arising from, leaving the strategy at DD or starting at equity high? Are they arising from us hiding our losses from our family, from our peers, from our friends, everyone? It's very difficult for people to accept losses. And we've seen that with, verified by Sensible. it's very difficult. People will talk about the losses. So that's something that we have to, understand and accept. So when we talk about assessment, so we did, look into reflection. Now we talk about assessment. How do we assess ourselves? There are, for every negative emotion, there's a positive emotion as well. Fear is equal to joy. Fear to opposite to fear is joy. It's not euphoria. I want to also put up joy as an emotion, not euphoria, not being euphoric, not being thinking, oh, I'm at the top of the world today, I've done everything. We have to accept the ups and downs of trading while managing risk. You might have a day which is fantastic. I had a fantastic day yesterday. I had a shit day today. But I have to accept it. I'm living with it. I've accepted it. It's not that on a fantastic day I will spend more. I'll go out and buy myself a car, and on a shit day I'll think of selling that car. Of course, this is not this is an exaggeration of an example, but that's how people have to understand this. This is joy should not become a euphoria. A guilt should become can be balanced by optimism. When we have optimism, it's not overconfidence. When we talk about balancing of the emotions, and how sports men will balance their bring a balance in their weaknesses and strengths. So we don't need to be overconfident here. We have to be confident but not overconfident. We have to have a measured approach. We need to understand the system will have losses, system will have gains. So if there's a 15 day of gain of a system, that doesn't mean that we just double the allocation to that system. It can always change. You can always have a situation where it will have an extended period of drawdown, and that is because statistically, whatever number we see, the backtest shows us. Tradetron is these days showing us some numbers in terms of success rate and average positive rates. This is over a period of time. This is not for a particular day. So it might be that for last 15 days, that success ratio is 100% or success ratio is 90%. But over a period of time, that is 70%. So how does it happen? So if it is for 15 days, it is going to be 90%. For the next 15 days, it might be 60%. So April, you have raised your hand, but we'll be taking questions a bit later. Then, we talked about shame. Opposite to shame is glory. A lot of people try and show off because they have gained a lot on a particular day, and they will, act, differently on that day. This is something that we should all avoid as well. So for every outcome, there is going to be a winner and a loser. And someday we will win, and someday someone else will win. When we end up in that, zone of just talking about our wins and not talking about our, losses, we are still ruining our psychology because we are not being humble enough. Envy, the positive side of that is competition. So we don't need to envy someone. We need to compete with them. Competition can be in any format. You don't need to be jealous with them. Let them, they have a different psychology. We need to just understand that they've absorbed their psychology much better than us and learn from it. And then compete. We have to compete with our goals. Someone who has a 10 lakh capital and someone who has a 10 CR capital, both of them will have different kind of goals. And that's where, we have to be measured and, compete along. Then comes a plan. Now, we talked about these are the things that are aspects of psychology. Now, what is the plan? How do we build our psychology? The first and the foremost thing is to know our personality. We have to know what kind of traders we are. The moment we know that, then we can plan towards all the strengths or the positive and the negative emotions, balance them out and work it out in a plan. This is a guideline that we have. It might change from person to person, but this is what we believe in general. This is a guideline for conservative traders to aggressive traders to very aggressive and fully directional traders. These are the maximum drawdown risks that people should are looking at accepting if they are a particular kind of traders. But 30 to 40% might seem very high for some people, but someone who's fully directional would take that kind of a risk. And you need to understand, if someone's saying that I want to be fully directional, we talked about person A and person B. That person B wanted to be like person A with a 30% directional allocation, 40% directional allocation, but he was not able to be someone like him because his max drawdown risk that he thought was, 15-20% was not that. He was actually much, much lower than that. He could not survive more than 8 to 10% drawdown. For him, that kind of a drawdown was really paining him, pinching him. And that's what we need to understand. The moment we understand this part, and I'm trying to emphasize on this, what is the drawdown that we are able to accept on our capital? The moment we are accepting this thing, we have the first part of our plan set. If we are conservative, we are not going to do something which is positional. We are not going to do something which is, directional. We'll do something which is semi-directional, which will be intraday. So because we don't want to take that kind of risk. Anyone who goes overnight, the risks are, quite, they tend to be quite high. So when we talked about our maximum drawdown, so this is the first part of, how do we control, fear and joy with a sense of control? How do we bring a sense of control in our trading? We have to limit our exposure basis our max drawdown that we have calculated beforehand. Now there's another webinar that Nelson talked about, where we talked about how to build your portfolio. We can always go back to that webinar, and you can always revisit that webinar and see how we built our portfolio by calculating our maximum drawdown. And that comes to the second part of the plan, which is diversification. The moment we have calculated our maximum drawdown, the moment we do that, then we build a portfolio of strategies to diversify. Because sometimes some strategy will work, sometimes some strategy will not work. Some strategy will be at equity high, some strategy will not be at equity high. But that doesn't mean that we will end up leaving the strategy at that time. Because if you leave, then you will have guilt because the strategy is recovered. We have to have a balance. The moment we make that balance of strategies with low correlation to have consistency and portfolio of strategies, we have achieved our second part of the plan. I'm not going to talk about this in detail. We have had a 1-hour webinar of this. So just, giving a precursor or information about, what portfolio of strategies is. The third part is to come and review. When we talk about this whole thing about shame and glory, the moment we start looking at our performance and start looking at it as a review, rather than it's my win or a loss, when we start assessing it, we start recording, daily P&Ls, daily activities with, this understanding that this is something that happened, and what did I do on that day? What did I do differently on that day? Did I change something? Did something happen in the market? Did I get a idea of something that was going to happen? Specifically, something like an expiry. Were you over leveraged on expiry? Because that it was a high probability event and you went in over leveraged. Was that the reason why you lost big? So those kind of reviews are something that we can, we need to do regularly. And this will help us looking back at it. And at times it will actually give us confidence as well. Because most of the times what will happen is a big drawdown day might be followed up by big gain, or a big gain day will be followed up by a big drawdown day. That's what exactly happened with me. Yesterday I had a 3.5% PNL. Today I have a approximately 1.5% loss in that 1.75% loss today. Happens. This is how life is. This is how trading is. So we have to look back. I have gone through these cycles many times, and that's how I built my psychology. These are steps that my team, and a lot of other people that are trading with us as Strategy One, they have built their psychology around it. Last part is to have a goal orientation. So how will we stop envying other people? How will we stop being jealous? We have to build our own goals. We can't be looking at, so if you have max drawdown, you can't accept more than 5% max drawdown. You can't target more than 10% return as well. That's the whole point. Someone wants to target 10% return, of course the drawdown will be higher. Option selling, generally, our stop losses are much higher because we are selling a premium and assuming that it'll decay. But when the gamma move comes in, it takes away quite a bit of P&L. That's the truth of life. There's nothing like a, a way of saying that I will always be able to control my drawdown to 1% unless you're doing it as scalping. And that is a different thing. When we talked about scalping, and then it's in a sense, scalping is nothing but, curve fitting, because you're trying to capture each and every move. And that doesn't happen. You might be able to successfully able to do for a certain period of time, for certain part of your portfolio, you might be able to scalp and get your way out. The costs related to that are very, very different. They're very, very high. Slippages are very, very high. So we have to build up our estimation of drawdown, our ROI, and then build a portfolio and keep a track of it, and just be focused on that. The moment we are there, these four elements build our plan on how to make our psychology. Just these four exercises, if we are able to do on a regular basis, plan it out in a way that we have our max drawdown calculated every day. We know that, okay, this is a drawdown I can take. This is a drawdown I can go to. If you're doing intraday strategies, if you're having a portfolio of strategies, you know that, okay, someday something will work, someday something will not work. We start recording and we make sure that we are reviewing our performances and seeing how, a bad day turned into a good day turned into a bad day, a bad week turned into a good week. Those kind of things will keep on happening. There's nothing that we can do to control it. These are part of trading process. And eventually build our psychology around the ROI that we want to achieve. These are the steps of this plan. This is the only way to build our psychology. It's an ongoing process. We'll keep on changing. Our estimation of the risk will keep on changing. We talked about this. This can keep on change. So if you have someone might well become more aggressive as he does more trading, and someone else might become more defensive because he's already got enough for him to take care of. He wants 4 or 5 lakh rupees in a month. He's got 10 crores of capital, and he says that I'm fine. I just need 4-5 lakh rupees, which is what, about 5% ROI. So, or 0.5% ROI. He will say, I'm fine with 0.5%, but someone else might say, no, I have 1 CR, I want 5 lakh rupees. I want 5% ROI per month. So that's something which will be independent of, all of us. It'll be very different to all of us. It'll happen at a different pace for us. Some people might say, I don't want more than 1% drawdown, whatever happens. So he will make sure that, on a day when, things will not work, he will just cut his position and go away. So that's how, we build our psychology. I'll come back to this slide once we take the question and answers. Before I do that, I'll just give a small introduction about strategy one and, what we do. So we are a creator on Tradetron. We have our trading strategies on Tradetron under 3 basic baskets. Gamma, which is basically our intraday and positional option buying strategies. Theta strategies, which are straddles, triangles, and non-directional strategies mostly. And then we have Zeta strategies, which are intraday and positional directional selling strategies. The strategies fall into different quadrants. So there'll be positional strategies, there'll be intraday directional, as we talked about, and then there'll be non-directional strategies. So these are 3 quadrants and then 3 types of strategies that we have. Just another view on the strategies that we have. These are our strategies on Tradetron. We have, we are known by strategy one as a name. You can see these strategies. Unfortunately, a lot of data is not available because of SEBI, but then there are a lot of live codes are available on the sheet, and you can see all these things, when you go on to the link that we will have. We are a team of 7 people who have a combined experience of more than 25 years across different markets. We have been trading on Tradetron for more than 1.5 years as users and 1 year as a creator. We have a current AUM of around 30 CR, in fact 35 CR yesterday, and more than 400 to 500 active deployments across different strategies. We have a basket of strategies. We showed that to you a bit earlier. All these strategies are lowly correlated, and we try and build portfolios as well for your requirement as per your requirements. So you can reach out to us on Twitter. You can reach out to us on Strategy One Algo on my Twitter handle. We have a Telegram channel, we have a website, and we are of course available on Tradetron. With that, my presentation on trading psychology or my lecture on trading psychology has ended.
Thank you, Vishal sir, for a wonderful session. Guys, if you have any questions, please type it out in the chat box so Vishal sir can read it out and answer your queries that you may have.
So you need to type in the chat box for us to get the questions.
Vishal, the chat box is not opening for me, but I'm not sure whether that is the same case for everybody else.
Okay. Someone can just
chat box.
Yeah, so someone did reply on this chat box. Yeah.
Okay.
Yeah. Any questions, guys? I mean, you want me to go through any of the slides? You want me to talk about more about psychology? You want to, someone wants to, talk as well, they can raise or request for mic to be opened, and then we can allow them to speak. Okay. Okay. So yeah, so a couple of questions now. First is Bhavin. Can you please explain how Algo will be helpful? So Bhavin, Algo is a tool that we have. While you're trading, you're doing any discretionary trading, you might be using some technical analysis and you might be using some fundamental analysis. You would be taking a trade basis some logic, right? Algo is nothing but that logic coded and coded by someone, coded by you. You can code it on Tradetron or you can use my coded strategies, anything that you can do. The moment you do that, it will execute on itself. So a lot of people feel that it will execute on itself, but then I don't need to worry about it. We will need to worry about it because we will see the PNL eventually. And a lot of times it is, not in our control. And we start feeling that, okay, it's not in our control. Then how would we, trade, and how it will be in our control, and how will we be able to make money off it? So that's something is part of the algo trading psychology. Someone who starts trading on algos, he might have issues in terms of understanding how Tradetron works or algorithm works. So those kind of things would happen. But eventually, what algorithm is nothing but a system that you would have understood or you would have traded, but just coded. So that's one part. Now I'll come on to next question from Emmanuel. He wants me to go to the algo trading slide, strategy slide. So yeah, so this is the strategies that are there. Imal Guran, sorry, I'm not able to pronounce your name correctly. So yeah. So yeah, these are the strategies that we have on Tradetron. So you can just view it while I'll take the other question that is from Mr. Patil. Could you please say a few words about difference in psychological requirements in discretionary trading and system trading? Because I personally don't cut a position in algo even if the trade is losing. And the reason, I feel it is against the rule of algo. Exactly. I think when we have designed the system, the whole idea is that the system will take the trades all the time. We are actually allowing the system to take trades without our emotions getting affected. I'll just give you example. Some of the days that has happened, that I had an overnight position. I had a wonderful gain in that, while I was closing. But at the time of opening, that position had a loss. And normally what I would do is, if I was doing discretionary, I would cut the loss and I'll say, oh, my 1% loss per day is done. I'm done. I'm not going to trade. But what the algo does is algo will still trade. And the reason for that is very simple, because algo is coded to do it that way. It forgets what has happened in the previous thing. It is an automated system. It will not miss any opportunity to trade. It is trying to make sure that you remove that emotion, the fear, the joy, because if you've got more, return than what you thought of, you remove that joy, you remove that fear, and you keep on trading. That's what the algo does. So yes, you're right. When you try and manually intervene in the algo, it's actually going against the rule. And if the loss is pinching you too much, that means there's something wrong with your allocation. And that's what we need to work on. We need to work on a portfolio of strategies. We need to work on, a plan to have a diversified portfolio, right? Next is if a strategy asks for a capital requirement, then will it be enough to manage continuous drawdown days? Will capital addition be required? So yeah, this depends upon strategy to strategy. Most of the times, there is this rule also I have is that at least with strategy one, all the strategies have got drawdowns included in the capital. So if any strategy is breaching the drawdown limits of that in that period, we will revise the capital and advise to people that, okay, now the capital needs to be revised. But most of the times what happens is if you have a portfolio of strategies, that max drawdown, which might, a strategy might have a max drawdown of 10%, but that might not come. You can see something like this here. Now I have a very aggressive portfolio from, a lot of people, say that, okay, Vishal, you have a very, very aggressive portfolio. I have a 30% directional allocation, which is majorly into ZIP, into GMP, into ZIP, Bank Nifty, into ZAP, which is another strategy. Now, all this, strategies, you can see their drawdowns are 54%, 27%, 30% allocation is there. But then I also have allocation into a strategy like TDS, a strategy like TDD, which has a lower drawdown, 2%, 5%. The strategy like TDSP, which has a 4% drawdown. Now, what happens is that when we have a portfolio of strategies, even despite having a 30% allocation on aggressive strategies, I have in the last 7-8 months, that I've been using this combination of strategies, I've had a max drawdown of 3.5%, which was there in October. So that's it. I mean, you talk about what will help you to maintain your psychology. You can see a strategy went down to 54%. A strategy went down to 27%. And still, I did not lose my mind because it was under my maximum drawdown risk that I designed for myself, which was 5%. And then I have a combination of strategies. I take leverage in a certain way that I don't need to be over leveraged and make sure that, even after this allocation, I have a decent amount of buffer. At the same time, I have a non-correlated portfolio of strategies. So it's not that every time that ZIP will be under losses, GMP will be under losses, or when TDB will be under losses, TDD might be having gains. So these are the things that will define us, define our trading styles when we match the portfolio with the risk that we are able to take, right? And that's what everyone has to do. That's part of our trading plan. Once we do that, we will be able to get to that trading psychology that will not affect us, and we will get the returns that we want, and it'll be goal-oriented things. So Prashant has asked a very important question: what to do when Algo is not giving me the expected monthly ROI? So once this is a very critical question that a lot of people keep on asking. Look, the ROI that you're seeing is a past ROI. Past ROI is never a guarantee of future ROI. But a past drawdown is a guarantee of a future drawdown. So when you look into an ROI, just do understand that ROI can decrease as well. And that can depend upon many different factors, right? When we talk about when a strategy is not giving us the results, what should we do? If it is the only strategy you're deploying, of course, you will have an issue. But if it is a portfolio that you're deploying, and we saw the case of someone person C and a person D, they had 1 month of no return at all. They of course, when you join, when you want to do algorithms, you want to trade algorithms, you're having an expectation that I'll get 3 or 4% per return per month, or 2 to 3% return per month, whatever expectation that you have. They had put up their expectations accordingly. They had designed their portfolio accordingly. It would happen that you will not have that kind of a return. But if it is under your control, if it is under the allocation that you have, if you're comfortable with the strategy, and then you're seeing that, okay, uh, it has performed similarly with other strategies as well, then that analysis will help you decide if you should continue with that strategy or not. More on this can be found out from our previous webinar when we are talking about correlation and building of a portfolio, when to replace strategies, how to replace strategies. So that is what we have put out. So Bhavin is asking, in the monthly fees, what is 5% of? Yes, it's 5% of the profit. Gross, the variable fee is 5% of the gross profit that you generate. Right. So how much weightage you give to backtest result? Do we need to do paper trading after we achieve result in backtesting of a strategy? So backtest, again, everyone has a different way of making strategies. When we talk about backtest, we consider backtest as a validation tool more than a creation tool. How we create strategies is the basis of our market understanding, and everyone will have a different thing. Someone will say, I've heard someone doing something. I'll try and understand that thing, copy that strategy, make it and optimize it with different levels of stop loss. Someone else would say, someone like me would say, OK, I understand the market is behaving like this. In the last 6 months, it has behaved like this. Does it still behave like this over a period of time? And that's where I will use a backtest. So it's a validation tool. Yes, once you do a backtest, you need to do paper trading, you need to do offline trading, or you need to go live on it. Unless you go live, you would not know what's actually affecting the strategy. What is the kind of slippage that is happening? Different instruments will have a different kind of slippage altogether. So this is something that you will not be able to get into backtest, because backtest is a binary thing. It will be on an open price or a closed price. Nelson and team have done an elaborate video recording of interpreting and understanding how the backtest tool works. So there'll be different things that will be there in the backtest, but the real thing you will know only when you trade the strategy in live. And that's how we go about it. We trade strategies in live and then we release it to people. Okay, so Gaurav is asking, where can we find the recording of this webinar? This will be on YouTube, and I think at the end of this, you've joined from Tradetron, yeah? So you will have this from Tradetron handle on Twitter as well, and on Tradetron community, we will be sharing this video as well. On our community, we'll be also sharing this video. So you will have the recording of this webinar. If you have any issues, you can reach out to us. The details we mentioned in the webinar, I'll again go back to the same details. You can reach out to us on Twitter or on our Telegram community. We will help you out with the recording of this webinar. So Mr. Ella Murugan, do we need to have a backup algo trading platform? Because we are facing issues often with one platform. Where can other platform be there, and can your team help on another platform? So unfortunately, I cannot answer this question right now because we are only on Tradetron right now. And unlike, see, tech issues will happen everywhere. It is something that we have to be careful about. Yes, there will be issues with the broker. There will be issues with the trading platform. In fact, today in the morning, we had a small outage in Tradetron. These are all part of technology. When there is a technology involved, there is servers involved, these things will happen. And when we talk about our live results, or that's where I think it's a very important question, because when you talk about backtest result, backtest does not consider these kind of things. While live results will consider these things, that there will be a technology issue. What will you do when Zerodha is not allowing you to square off your orders? There's an issue with Zerodha, there's an issue with Kotak, there's an issue with a broker. Best of the strategies and the best of the platforms will not be able to allow you to do that. That's where the live thing comes in. So even if it is a one-off situation, it will affect the results over a period of time. And you will see that as reducing your ROI. Not like, looking at a backtest and saying, okay, I'll be millionaire in 2 years. I start with 1 lakh rupees, I'll make it 10 lakh rupees. In 2 years, I'll keep on constant compounding. It doesn't happen like that. Thank you, Gaurav, for your comments. You're impressed by our trading mindset. It has been built over a period of time. Of course, there's a background of experience as well, but trading psychology is built over a period of time. And what we are just trying to do is share some of the tools that we have built for ourselves to people, and then help them to build a psychology, because eventually when the psychology is built, the ecosystem will grow. We've seen many people leaving Tradetron just because they could not understand the psychology of required in algo trading. They felt you switch on the algo, it will make money. It's a money printing machine. It's not that. It's not like that. Algo is not a money printing machine. Algo is a managing tool. It's managing your money. It is managing your strategy. So we have to be realistic with our expectation as well. Satyapal Singh is asking, I'm new to algo trading. Please tell me about the future. So, sir, algo trading probably is the future, because everyone wants to trade and have additional income, but not everyone has the expertise. So what generally happens is, when someone is new to trading, they will go and reach and then see people who have been successful, and they will go and Pushpendra, I'm allowing you to speak because you've raised your hands. But let me first answer this question and then you can speak. So, when you're new to trading, you will look into many different aspects. You will start with someone, get training from someone, understand from someone. You look into TV, and you look into certain things that you might see working for people, and then you will do it. You will try and create your own system. You learn from there.
First of all, good evening, sir. A very educational webinar.
Yeah.
Sir, actually, I'm very new to algo trading. I haven't even started. I know trading basically. I have like 7 years of experience. I've been active in the market. I have seen my ups and downs. So this year, at the end of this year, I'm at a down point. So I was trying to find new ways to get invested to stay active in the market. So can you guide me on there?
Sure. So Pushpendra, I will come to that. I'm trying to answer Satyapal's question, and I think it will also help you answer, your question. So when we talk about, people have different tools when they come to trading. They will go and learn from someone, and then get some experience, and then they will create their own systems and they will start trading on that. And eventually, what happens is, once you do that, then you have your own system, and then you trade on that system. Now, algo trading is similar. You're just coding that system into a software which will execute on your behalf. Now, if you don't have that expertise, right, you will come to some creator like me or someone else, and you will tell them, okay, I want to use your strategies. And then you, instead of, getting some training from us, you will use our strategies and you'll pay us for our IP or our, intellectual property that is there. So that's how algo trading works, right? The future is much more. I would put up, this is much more transparent. This is much more tangible than any other form of training, or for a lack of good words, I would say the Regi channels that are there, because over there you're getting advice. Here we have the skin in the game. So you have a skin in the game. We have a skin in the game as well. So algo trading on Tradetron, you can create your own strategies. You can learn from all the resources that are there. And if you don't want to do it, you can come to us. Our strategies are there on the marketplace. You can use our strategies. You can learn. You can gain from our expertise, and then pay us a share. That's the idea behind, algo trading on Tradetron. And as and when, this ecosystem grows, everyone would knows that, psychology is a very difficult thing to have. Even in discretionary, it's discretionary. That's, very difficult. At least in algo trading, we are there with you. It's not that we are giving you we are telling you to do something, and you are not seeing that happening for ourselves. Our trading, how it is happening is visible to you. Tradetron has got wonderful tools all across in terms of showing our live PNL to you, showing our live trades to you. So we have the skin in the game. You will have the buying in it. And there's a term that I always talk about. There is, when you trade, you need to have conviction. When you trade and learn from someone, you have a shared conviction because you're taking their conviction. Now, when you trade algos, you again have a shared conviction, but you also have a confidence that the same person is trading on those algorithms. Not that he's just giving you advices. He's just telling you what to do because he's also doing it and it's happening together. Even if you are busy, it's happening together. And that's the power of Tradetron. Any more questions, guys? So I hope, Pushpendra, I answered your question. You wanted to understand how can I help you. You can ask me more questions on my Twitter handle or our Telegram community. You can come there and we can answer these questions for you. I'm allowing Gaurav to speak as well.
Yeah, hi.
Hi, Gaurav.
Yeah, hi. Actually, I just wanted to have a view of what I'm doing on Tradetron right now. Actually, I've been on Tradetron for last 2 years, and in May 2021, I started with with an algo. I've created my
Yeah.
own of option selling.
Yeah.
But in March 2022, it's the
Mhm.
first month I got loss in that algo. So
Yeah.
till that time I was not aware that okay, I can even get loss in my this because the backtested the data showed me that every month you will be in profit. So
Yeah.
I just kept on increasing my multiplier every month on month. So by the end of December I was at my peak multiplier.
Yeah.
So, but as per your webinar, so I'm able to correlate what you have told, that backtested data and the real live auto data. It's really different.
Yeah.
So my question is, like, from March, April, May, June. So for 4 months, my strategy was in like at par or -1% or -2%, but it has
Yeah.
given a good drawdown, a big
Yeah.
drawdown.
Yeah.
But after that, I stopped using that strategy, and
Yeah.
but I kept it on live on paper trading itself, and I shifted to some other strategy. I was trying other strategy, but in the month of July, it again started giving me profit, and then I again shifted it to that in July month, because I saw in June month it was the last month that was profitable, so I again shifted in July and on the main strategy itself again.
Yeah.
So my question is, so so instead of shifting on strategies to strategies, so how to handle that drawdown period? I don't have that portfolio of strategies, so I will be interested in having a one-to-one discussion with you regarding that, so that I can use your portfolio to manage my money. So
Sure. So Gaurav, I understood it's more of a question and a comment as well. So, again, very relatable, right? Strategies, give results in backtest, give results for a couple of months, and then they stop suddenly performing. And some of these things, of course, can be handled by portfolio, as we talked about. Portfolios are nothing but, let's say you're having a strategy which is a 920 strategy.
yeah,
When you
okay.
do a 920 strategy, and then you diversify into saying, I will do a long straddle,
Mm-hmm.
right? That's a portfolio.
Okay.
Now, what that result will give is a different thing altogether. I'm not
Yeah.
coming on to that. That depends upon the, what is the parameters of it, what is the logic behind it, what is the logic of a 920. 920 is one of the simplest strategies. We talk
Yes.
about it basically assuming that at a certain level of premium decay, we
Yeah.
will, or premium increase, we consider market as going directional, we will cut that leg.
Yeah. Yeah.
That's
Perfect.
what 920 is. It's just saying that if there is a addition of premium, that means the market has gone in that direction. We are just going to cut that leg and continue with the other leg. That's a logic. That's a statistical logic. Now something else might be different. Someone might say it's a 200 DMA. So if something goes above 200 DMA, it is going to go up. And then he builds a system around it, right? And that becomes a different system, and then it can become a portfolio. But then you have to check the correlation of the portfolio. So this is a scientific exercise that we do. You can always come to us. You're very welcome to it. Come and get information from us about our systems. But eventually, yes, the only way to manage a drawdown is to have a portfolio of strategies. Otherwise, in October, one of my strategies, I had a 25% drawdown, and I would not be talking to you guys here with this kind of confidence had I not got a portfolio which restricted that drawdown to 3.5%. My own psychology would have been screwed badly. I would not be smiling right now, if that was the case.
Yeah.
So that's something that we have to all understand, build a portfolio, work towards it. We have a thing in our Telegram group. Sorry, I'm talking about ourselves because, we're talking about how we build our psychology.
Yes.
We use this term called "sehlenge." System hai. There'll be loss. We'll absorb it. It's fine. एक जगह लॉस होगा, दूसरी जगह फायदा होगा. दोनों जगह लॉस होगा, कोई बात नहीं. कल होगा ना फायदा. That's what you get with a portfolio of strategies.
Yeah. Okay.
It's like a team that you're taking out to play cricket, right? Dhoni might fail one day, but Virat will come in and he'll play. Even if he doesn't play, Washington Sundar will play. Even the 11th man, Bumrah, can play. Yesterday, I had a 0-0 strategy. It did wonderfully well to my portfolio. So anything can happen, guys. Right?
One last question. If I want to connect you one-to-one, so how could I do that? Using Twitter?
I've shared my Twitter and Telegram community. Of course, I can't give my phone number here. But you can reach out to Telegram community. You can also reach out to our website, which will take you directly to our Telegram community as well. From there, you have a link to go to Telegram community. You can reach out to Twitter. You can also reach out to Strategy One on Tradetron. Send an email via that. I'm accessible via that. Many modes of accessibility. You would even search Google and search for Strategy One. You will get linked to me as well. So I'm very accessible. Very transparent and very accessible.
Thank you.
Yeah. So another important question that is being asked by Ila Murugan ji. Someone is wanting to ask a question. Just give me 1 second. I'll allow you to speak, but let me first answer the question from Mr. Ila Murugan. When institutions are having edge with high-end tools and data, can retailers like us survive in algo trading? And then the second part of the question is, how are we evolving to face the market challenges? So I'll answer the first part. Even the institutions, right? They might have an edge in high-end tools, data, but they don't know what's going to happen. That's why they hedge. Actually, institutions hedge. Most of the institutions hedge. When you're running a family business, you will not keep, not many family businesses keep the money in the bank or keep the money, their cash against, something like a government bond or those kind of things. They'll end up using it for, investing somewhere. So that's the discretion part you have. And it might give you more returns. An institution might say, "Nee, I'll only be safe. I'll keep it in government bonds. I have less returns." So this is how institution thinks. Institution does not have any different edge than hedge. Their edge is the hedge. And what they have is a diversified portfolio of strategies. If something will fail, something else will come up. Institutions trade like this. Institutions don't trade on one algorithm, one system. They will trade on multiple things. That's how a retailer can survive, on trading on multiple systems. And talking about algo trading, the moment you do multiple systems while doing discretionary trading, we'll end up being confused. Which position which position belong to what? And eventually, that is where algo trading comes in. It can actually segregate that this position is belonging to this particular algorithm, you can analyze it. You can actually, take a call that, okay, this position is getting closed or you have to close this position. So that's where algo trading comes in, right? And this is the future for retailers to, make money sustainably. Algo trading is the way. That's why, Tradetron has been a wonderful tool for us to bring our strategies to you guys. And I'm sure, that will keep on continuing as well. The last part was how we keep on evolving with to face the market challenges. When you look into the data, if you look into different types of data, you will, we kind of analyze, okay, there are things that will happen in a certain period. Something will fail, something will not work. But over a longer period, what is working? So we always have that view of choosing things that work over longer term. And that's how we are relevant. There might be a situation where something might not work for a week, for 2 weeks, 3 weeks. But the 4th week, it will start working. The only way to face it is to have a diversification. Diversification of systems, diversification of assets, diversification of different instruments. That's the only way to face it. Because no one knows what can happen. A fall like 2020, everything fell. Even initially gold fell, right? It was only diversification which helped a lot of people survive. So we can't predict any of these market challenges. We can't predict how the market moved today. If we were able to predict, then we would, not be having drawdowns at all. We will not be talking about psychology. If we are able to predict, what is the need of psychology if you're going to get able to predict and you have, you're always being ahead of the market or always being changing the market. It's a mythical thing, right? Mr. Patil is asking, you are a team of 7 people. I'm curious about how you people collaborate while creating a strategy. A strategy is the idea of a person. So discussing among many can create a confusion, or you people are creating strategies separately and independently. A very, very good question. So this is how which happens in discretionary trading, right? I might have expertise on a particular indicator or a particular way of looking at data. And that's how I will code that strategy. Someone else in my team will code a strategy in a different way. So we have basically ownerships of different strategies within the team. So for example, a particular strategy, this is owned by a different person and this is owned by a different person. So that's where the diversification comes in, because this person, has a different logic behind it, is looking at the data differently. And that's how he's creating independent strategies. Where we collaborate is in support of customers, is in support of each other. When something is not working and we have noticed something, then we keep on suggesting each other, and then that's how we improve. So it's a, you can say that, okay, there's an ownership of the product is lying with someone, and the rest are, being support functions to that person. Yeah. Beyond this, if I tell you, it's basically going to become, very different in that sense. 32172, you had raised your hand and I've allowed you to speak. If you have any questions, you can raise it right now. Bhavin has asked a question. Working with multiple algos won't be possible for most of the retail due to margin constraint. How to start with algo with 2 or 3 lakhs? This is definitely a case. If someone wants to start algo with 2 or 3 lakhs, before that, I will just put up this thing. If you're going to trade in FNO with 2 or 3 lakhs, anything less than 10 lakh rupees, your drawdowns are going to be huge. So for someone who's having, a 2 or 3 lakh capital, if you're going to choose a strategy, most likely you will end up choosing a leverage strategy. Your drawdown of 10% is definitely going to come in. A 10% drawdown will mean, 20,000-30,000 loss in a day or over a period of time. You might not be able to absorb it. The same thing if it is a 10 lakh rupees and then you have, that kind of a drawdown, which is, 2 lakh rupees drawdown. You still have 8 lakh rupees, right? You can still deploy more strategies to recover from the drawdown. So you need to have a capital to do it. It's like there's not a business ke kahin se bhi aage or we start doing it. Sorry for using that word. We cannot start from scratch to do it. It is not possible. People who are giving you these ideas, they have not traded in real life you can start from scratch and be millionaire. That doesn't happen with trading. We have to start with a base, and that can come from many different things. You can save up your salaries, and you can save up your investments. There are many tools that you can use. You can pledge your shares to get margins. You can go a bit slightly aggressive, slightly conservative on that, and then trade accordingly. You can pledge your mutual funds. You can pledge your FDs as well. There are many ways that people can do it. But starting with something which is undercapitalized, starting doesn't work. It's like cricket, right? Someone is going to start playing for a state team or a national team and wants to play IPL. He needs to be good in fielding. He can't be saying, I have only got two skills, I can only bat, I can only do a hit a 4 or a 6, I can't walk in between. So that's the kind of thing that is required in algo as well. You need to have or algo or any kind of trading. If you have 3 lakhs, then you should rather do discretionary investment. You should rather do a long-term investment, get to that kind of a stage and then do it. कोई जल्दी नहीं है यार. I mean, there are people who will say कि we should start early, we should do it. There's no hurry to do it. In fact, a lot of people lose more money in hurry rather than staying. Yeah, so I'll unmute you. Yeah, rather than staying into one thing. Just 1 second. Yeah. So I have allowed your mic. You can unmute yourself. You need to unmute yourself. 3251. 32172. You need to unmute yourself. I have allowed you. R is asking if we have more than one option strategy, and if different strategy takes same legs in the opposite direction, how would Tradetron manage? So Tradetron always looks into it individually. So if a strategy is said a buy and another strategy is said a sell, both of the things will be executed, and it will be a net zero position. But both of the strategies will have a different selling with different points of exit. So the buy strategy will exit first, so it will be a sell position that will be there. This is a concept that a lot of people want to have an understanding of. So we can explain it further. You can come, you can ask us on Twitter, or you can reach out to our Telegram channel. We have explained it via videos. We have a sample strategy, and in fact, Nelson can give you a sample strategy as well, where you can understand how Tradetron works and how does it work. Bhavin is asking, so what is the minimum budget required for multiple algorithms? So we believe, at least 10 lakh rupees of capital is required to run a portfolio, a decent portfolio where you can have certain level of diversification. And once you have that, then only you will be able to get the benefits of algo trading, which is, what you're looking for, a kind of a return which is sustainable and something that is coming to you on a regular basis with less peaks and valleys, but more consistency. Yeah, so 32172 have allowed you to speak, but I don't know why you're not able to speak. Maybe you can just type your question. Yeah, you can just type your question here. You can just type your question here. I'll just take a minute to grab some water, please. Can I come up with a capital number based on certain specific return that I'm expecting? Maybe. I mean, that's one way of looking at it, and you can always, say that I want to achieve 1 lakh rupees of income. So how am I going to achieve it? If 3 to 4% is my is an achievable return through this basket of strategies, then a 4% means basically a 25 lakh kind of a 20 lakh kind of a capital that I will have. So I get about 1 lakh rupees of return from it. So that's how you would look into it. The return is also something that you need to look into over a period of time. Although we talked about daily wages, right? That market gives us daily wages, but eventually when we look into our own look into our own let's say performance in any job, we have to look at over a period of time. So it is daily wages, but we have to look at over a period of time. So returns have to be looked in over a period of time. Do you have any suggestions towards the strategies to combine? So that's there. That's our job, to tell you what strategies to use, so that when you come to our Telegram channel, we'll tell you about these strategies. What will be the best combination basis your risk appetite, what with your capital, everything. So we'll tell you each and everything around that. Mr. Ela Murugan, thanks a lot for your kind words. Yeah, thanks a lot that you've been joined. You've joined us, earlier as well, and you're part of our community. Thank you. Any more questions? This is a topic where, instead of questions, people have to reflect a lot. I understand that. So still, if you have any questions, do let us know. We are reachable again, as I said, on Telegram, on Twitter, on, via Tradetron as well. Just reach out to us. We can, work out together on this. Refer to this video again and again. How to know about future webinars? So that, if you're talking about our webinars, we don't have anything planned as yet in future. We do webinars on our Telegram channel and our YouTube channel, and you can look into that. Tradetron, they will advise on their channel whatever webinars they have, whatever discussions they have. So they will keep on adding that information to you. Yeah, so pricing, so I think, let's not talk about, those commercial things right now, because eventually this is a different aspect, right? This is what I showed you just as an introduction, that I have some credibility to talk about it, because I've been running strategies for so much period. I've been running my portfolio for so much period. I'm basically trying to show you my credibility, right? So we can talk about those kind of things separately. The pricing is very simple and transparent. You can see it over there. And there's nothing, that will come apart from that. You can just reach out to us on Telegram and we can discuss more about it. Dhaval is asking, where can we get recordings of these webinars? They are on Tradetron channel as well. And you will also get them, we will also post them on our Telegram community. If Tradetron allows us, we'll also put we'll put a video of this on our Telegram YouTube channel as well. So you'll get access through multiple, ways. Anyone else has got questions? Yeah, YouTube will be there, Dhaval. Yes. Thank you, Gaurav. So we will we'll connect with you on from our website. So yes, guys, forgot to explain. If you want more details on these things, you can come to our website. You can schedule a meeting with us, which is a one-to-one, Zoom meeting, and then we can guide you more on these kind of things. Mayur Patel has raised hands. Yes, Mayur, I'm allowing you to speak. You can unmute yourself. Mayur, you can unmute yourself.
Hello, good evening, sir.
Hi, Mayur. Good evening.
Yeah, sir, are there any option buying strategies available in Strategy 1 platform?
Yeah, we have option buying strategies as well. We have option buying, we have option selling, so this is the quadrant that we have. Gamma strategies are option buying, theta are intraday selling, straddle strangles, and zeta are positional and directional selling. And you can see it here. GMP is a buying strategy. GOS is a buying strategy. So we have these strategies. It's better. I mean, see, option buying is not for everyone. people. So we don't have we are not putting a capital of 20, 30,000, which is required for option buying. We are putting a capital with a buffer here. So it has got enough buffer to handle the drawdown as well. Because option buying is a leveraged form of trading. So we can connect with you. You can ask us more details about this, and we can explain you how to manage your risk on option buying. And everything is available on that.
Okay, sir. All these strategies are available from marketplace.
Yeah, everything is available on the marketplace.
Okay.
You can just search by strategy one and you will get everything. So you can take a screenshot of this. You can search by the strategy names. You can search by the company name, strategy one. You can come to our Telegram channels. It is again by strategy one. So you'll get all the information from there.
Okay, we can interact with you on a Telegram channel, right?
Yes. It's a two-way interaction.
Yeah. Okay. Thank you, sir. Thank you.
Gaurav, you had raised your hands as well, and you can unmute yourself and you can ask the question.
Yeah. Actually, just with your experience, as you have been working in with Tradetron and with Algo trading for so much time. So I have a capital of approximately 15 lakh in one account and 15 lakh in another account. So I have two accounts. So how much return I could expect from a portfolio as per your experience from live auto, not from backtesting, from live auto, practically from a portfolio of 30 lakhs, approximately in a quarter.
Gaurav, let's first go by the plan that we talked about, right? You have a portfolio of 30 lakhs. Now you first need to define your max drawdown risk, which is here. You define your max drawdown risk, and then we build a portfolio around it. If you're saying that I'm going to be very conservative, I'm going to do only intraday, then we build a portfolio around it. Once we build a portfolio, then the returns will come in.
Yeah.
Right. So if you tell me 30 lakhs में कितना return हो सकता है, someone would say, यार, I'm a directional guy, मैं तो 100% return भी ला सकता हूँ.
But drawdown will be very high.
Exactly. And the same thing goes, someone says, I'm a very conservative person, मुझे को 2% return भी चलेगा, 3% return भी चलेगा. So we can also design something like that, right? So it is something that you need to understand yourself. You need to answer that question to yourself, tell us, and then we will design a portfolio accordingly. We do have model portfolios. We have 4 model portfolios that are there on our channel as well, that are there on our. So we have a Google Sheet which does tracking all the analysis. Most of these portfolios will give you 3 to 4% return on average over a period of 5-6 months. This is a gross return.
Okay. Thank you. That answered my question.
Yeah. Anyone else? Anyone else has got any questions? Okay. So Nelson, okay, Senthil Kumar, sorry. So we will just take a couple of more questions because we had scheduled it for 1.5 hours. So we are close to that time. Senthil, you can unmute yourself and ask the question, and then we'll answer it. And any more questions that we can take it over, Twitter or our Telegram channel, or even Tradetron's Telegram community. Yes, Senthil, you can unmute yourself and ask the question. Senthil, if you're not able to speak, you can type the question. I've allowed you to unmute yourself. You can open your mic. If not, you can type the question. Senthil? Yeah, Veer is asking if we can get a recording. Yes, definitely there'll be a recording of this session. Tradetron will be uploading that on the YouTube channel. I think Senthil probably raised hand by mistake. So yeah. Nelson, so let's conclude it.
Yes, sure, sir. Thank you very much for your time, Vishal sir, for the inputs that you provided. It should be, I'm sure, it should be very valuable for all our listeners. Also, hello everyone. If you have any questions beyond this, as Vishal sir has already provided his contact details, you can either directly contact him or you can send us the queries on support@tradetron.tech, and we will be able to assist you with regards to your queries regarding even the strategy on Algo, as well as in general with regards to algo trading. So yeah, thank you very much once again, Vishal sir, and I wish you all a very happy weekend. Yeah, you can conclude, sir.
Thank you. Thanks a lot, everyone. It was a pleasure taking these sessions to you guys, and trying to explain to you things that we have done and how they helped us. We hope this added a lot of value to you, and looking forward to further interaction from you guys on any of these things that you want to have. Thanks a lot, Tradetron, for providing this platform. Thanks, Nelson. Thanks a lot, entire team of Tradetron.
Thank you, sir. Thank you very much. Happy weekend. Yes.
Have a good day, everyone. Thank you.